Morning traders, Paul here with GammaEdge. Today is Monday, the 10th of July. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, short-term market model had a trigger day up on Friday. Of course, we saw an end-of-day reversal there, but nevertheless, the day did close higher, and that is constructive for the bulls, at least on the short term. Railroad track pattern also confirmed a new trigger day up. We'll have to see weakness today in order to undo both of those signals. Because of that bullishness that we saw, we actually triggered our long-term model also to the upside. It remains in an uptrend. This is a resumption of a previous uptrend with now both the moving average slopes to the positive, and we consider this a trigger day up too. So 3 trigger day up. Signals on Friday generally back test very, very well and is suggestive that we can buy the dips. Now, that being said, we are below some key levels here, so we want everyone to be very, very careful. Although we're bullish using a methodology that we call driving via our rearview mirror, we are always aware of a reversal downward or a continuation upward. Right? So we're looking for both of these today. As long as we do remain above the key levels, though, we do think dips can be bought, but there is no substitute, of course, here for risk management, proper sizing, and things of that nature. Do not get out over your ski tips. So we closed right at 43.99, right under the 4,400 level. It's a major level, of course. It's a Livermore level. That's important. The SPX PM complex, the positive transition point moved up to 44.20. And minus trans moved up to 44.10. When we see this transition upward, this is short-term bearish, actually. It's positioning for additional downside moves, so I want everybody to be aware of that. The combo complex also has a slight move upward in the transition. Same thing. It's very tight. It's very well-defined. When you see this, we can break either way, and because we are below transition in both the SPX PM and the SPX combo, we are starting the day in a position of weakness, a position of bearishness. So we need to get above the 44.15, 44.20 level in order for the bulls to have any hope of moving up. These are key levels according to Delta, Gamma, and Vanna, and Charm, of course, and so just be aware of that. We do see the short-term range, 43.60, is most likely the lower side test. Below that, we do think you're going to see some monetization of the puts, which will bring us upward. 4,500 is clearly the out-of-the-money target for the upside, and a lot of folks are looking up towards that direction, certainly by the end of the week. Zero DTE, folks, 44.20 is positive transition. Minus trans is 44.15. Again, very, very well defined here. Plus GEX is 44.25 with minus GEX at 43.85. If we break above or below each of these levels, we would look for a continuation in the direction of the break. So bullish or bearish, because transition is very, very tight today, we could go either way. Note, we have a significant negative GEX expiry with higher than normal open interest vaporizing by the end of the day. Charm flows will be supportive as long as we can remain close to transition, that 44.15, 44.20 area, and we do not aggressively test the COTMP. If we move down very rapidly towards where we think that monetization area is, especially if we have targeting below where COTMP is, which is right around the 43.93 area right now, we do think we could break south and possibly test that 43.75, 43.70, 43.60 area. We are looking and we'll be watching all day today using our two commands, which have proven to be very, very useful. The VALU and the VALD commands can help you get an idea of where the market is targeting, either above or below. And so look for that to be indicative of the directionality that we could move towards and stall. Market model, as I said, we had a number of triggers on Friday. It doesn't mean that they will continue. This is not predictive. I know we get feedback all the time that, GammaEdge said you're bullish and we pull back. This is not a predictive model, folks. This is a trending model, and so you need to pay attention to what a trending model does. It is a look in the rearview mirror. It is not a forward-looking indication. That said, it has momentum, and the momentum you can see with the red line here and the cyan line tells you that we are in a longer term upward phase, but we are challenging that by when the instantaneous CT or the cumulative tick pulls down below it. This stated, Friday was a solid day. We did see some profit taking and pullback, of course, at the end of the day, but we're still well above the longer term trend, and so we are bullish. Now, individually, the individual trigger signals don't test very strongly compared to the baseline. In fact, there is just a very slight edge over a large number of trades. But when you combine all the triggers together, it's the fourth strongest for our key strategy here that we're looking at, what we call the P-trans to PGEX strategy. And as a result, you cannot ignore it. And I would urge everybody to study this, understand what it means, and use it to when you're going to increase your long exposure or protect your long profits. Taking a look at the gamma charts, this starting with the PM settled complex. First of all, we are in a put dominated type of environment. Fairly strong. Your eye can see the strength that we have here to the downside, but your eye can also see the strength that we have to the upside. The net goes to the puts, and so just be aware that we have out of the money constructive charm flows that are going to be pushing us upward, but we do have some targeting that is available to the upside, and clearly 4,500 is indicated by the short-term traders. It has both the plus GEX level as well as the PM settled COI level. This is the strike that has the most calls in it. Now, short-term storm clouds on the horizon. The deltas are, you can see here in the net delta column, they're red. This is going to be problematic to making progress up to that 4,500. So we do need the out-of-the-money call speculators to step up and basically take or retake the strikes that are above the yellow line, and right now they haven't done that. We are below transition, which is indicated by the blue box, and when we're below transition, that is short-term bearish. So just be aware, we're in a model of weakness. We're starting off weaker in the SPX PM complex, and that's notable. Taking a look here at the 0 DTE, starting in the upper right-hand corner, again, we're still in a put-dominated environment, negative. Fairly strong expiry coming off today. Your eye can clearly see there is a lot of put-dominated gamma that is set to vaporize. As long as we remain close to transition, the 44.15, 44.20 area, we should have supportive charm flows, and we should not drop dramatically down through the overall structure. If we do drop, we want to see the 43.85 area hold. That will still give us a fair amount of support down below it. And so we don't think, we're going to test the 43.70 or 43.65 zones. That being said, we need not to get too aggressive down there. If we see a move downward, that could embolden the bears. They could open their puts, and that will pull us down further. So again, watch the value and the Val-D commands in the Discord today, and I'll give you an idea of the distribution of targeting that's occurring. Now, to the upside, you can see, first of all, that the deltas today are all red. That's going to impede upward progress, and certainly we don't anticipate getting above 44.50, just simply because the gamma falls off after that, and there's not a lot of sensitivity there. So again, watch value, Val-D, and that'll help you look at your distribution of targeting to the above or to the upper level. So 44.25, if we can take that 44.20, 44.25 area, will most likely remain supportive because the out-of-the-money put charm flow will be very, very strong as we go through midday. Into the bottom of the day, the out-of-the-money puts will collapse in terms of their charm flow, and the in-the-money calls will take over. But you can see in the call OI column, there's not a lot of calls coming off today. So if we don't get above the 44.20, 44.25 area, it's going to be very, very difficult to hold those levels. So we'll just have to wait and see what happens. Taking a look at the 1 DTE, a little bit fatter transition, as you can see. So we're 44.05 up to 44.25, which includes the plus GEX for the 1 DTE. The key takeaways here are that we've got deltas going back and forth between positive and negative. We also have gammas going back and forth. We're right below the transition for tomorrow. Would not be surprised if we parked close to this area again today or into tomorrow, anywhere inside the indicated transition block, and perhaps even down below a little bit above that 4370, 4390 area. Now, if we do fall downward, we do look into tomorrow to have the 4370 strike maintain its strength. But be aware, there's not much liquidity that exists between where we are right now, the 4398, all the way down to 4370. So it would not surprise us to fall down through this structure, but be supportive at that 4370 as we hit COTMP and as the bulls look for a buying opportunity. The crystal ball view into the week, fairly weak overall. For the week, we've transitioned from a positive dominated expiries to negative. So you can see that it's a fairly strong put dominated week, as in sequencing will matter. How we step through Monday, Tuesday, Wednesday, etc. will be very, very important. Transitions very tight, very clean, 44.15, 44.20. There are those numbers again. They keep coming up on multiple time frames and multiple slices of the data. When you have that happen, this is important, they overlap and they are strong. So just be aware, if we can get above the 44.15, 44.20 zone, most likely sentiment will shift back to a bullish, and we'll start seeing the opening of out of the money calls and the closing of below us of the out of the money puts. Until then, we do think there is a bull case, or a bear case for the put buyers to keep adding to the downside. As long as they do so, the charm flows, and depending on where they distribute those puts, will be supportive. Now, there's that 43.75, and your eye can very well see the mass that is forming below us. Again, the charm flows here will be very important as we go into the week, and are clearly dominant right now. Taking a look at the combo complex, more weakness. Although we're still in a positive or call-dominated environment, it is significantly weaker than it was on Friday. So a lot of puts did come into the complex, and a lot of calls did get closed out. Above us, where the red X's are, I've indicated where the deltas are continuing to weaken. This is literally what we describe as the sand eroding on the beach under your toes. What we're seeing here is we're seeing out of the money calls close and allowing the in the money puts to come through. And when you have that, that impedes upward progress. So we want everyone to be aware of where those red X's are. It's going to be very, very difficult to make progress to 4,500, especially in the combo complex, which is the AMs and the PMs put together, until we see those deltas turn to a call-dominated structure. So right now we're looking at the 44.45s as the start of that, and we're going to be watching this day over day this week just to see where things go. Transition, very clean, 44.10, 44.15. For those of you who have been tracking this, you know that this transition has repaired itself. It is extremely well defined. There's no ambiguity here, right? We are below where that yellow line is. We are below transition. That is short-term bearish, right? So now the combo complex has got to get above the 44.15. We need a close above 44.15 in order for the bulls to have any chance of pulling the nose up on this airplane. If not, then we could continue south, and we've talked about where in the short term we could progress. Now, 43.65 is the first delta, red delta down below us. That is the end of month JPM strike. Those are approximately 11,700 short calls down there. It's actually a little less. We've been observing some covering down there. Nevertheless, they are not liquid, but they are present, and they have an influence on the overall delta structure as well as the overall gamma structure. We also point to the 43.45s and the 43.35s, which are now showing increasing weakness down below us, and we want to keep an eye on that because that could be a lower transition range as the calls get closed above us. That's the out of the money call speculators. As they give up hope, transition could start to move downward as those calls are closed and the puts really become dominant within the structure, and we could see a push in that direction. Last slide of the deck here, basically plus GEX remains up at 4,500. That is the upside target for the market. As I said previously, we're going to have a difficult time getting there with the structure we have here today. To the downside, we see minus GEX has moved up to 4,200 from 4,000. This is important because this typically shows short-term positioning to the downside to take advantage of any short-term weakness that could be occurring. So keep that in mind. The area 44.10, 44.25, 44.15, of course. The transition structure is well defined. Your eye can see this. I don't need to belabor this. When you see a well-defined structure in the combo complex, pay attention, right? Because the market is positioning for a break in one direction or the other. And the bulls and the bears are balanced, independent of the gamma and the delta, and they are, they're drawing their lines in the sand. The other takeaway here, you can see the JPM end of month, end of quarter September strike up here at 46.65. Not relevant for us, but just be aware it is an upside target. We are obviously below that right now, and it's just going to continue to grow in its gamma dominance. 39,000 contracts sitting, short call contracts sitting up there right now, and that's why you see the negative going gamma there. So that's it for today. If you have any questions or comments, come in to GammaEdge.us. If you go to that link, upper right-hand corner is a pricing tab. Click on it, fill out the blanks, come on in for a 14-day free trial. All the tools turned on, no risk to you. Follow us on Twitter, please, at GammaEdges with an S. We do post other materials time to time. And then here on YouTube, two things. Thumbs up if you like today's commentary. Gives me immediate feedback that I'm providing useful content for you. And then, of course, subscribe so that you get notified next time we post something. So with that, I will bid you farewell. Make it a great Monday. Make it a great week. Don't get out over your ski tips. And we'll see you in the Discord. Thanks, everyone.